Okay, we want to continue our discussion of Social Security by detailing specifically the self-employed and their need to follow Social Security law and have correct withholding and payment of taxes under Social Security and Medicare if they are self-employed. This is an important change that was made to the law, which, as I mentioned, was originally passed in 1935. It's been changed many times, amended to deal with changing environment, but the notion that self-employed were not clearly defined well and clearly taxed properly, it was felt, led to this 1952 or 53 passage of this Self-Employment Contributions Act, which is an amendment to the original Social Security Act. And it dealt with independent contractors and the self-employed, and essentially what it did was said that you have to start paying both the employer's side of Social Security and the employee's side of Social Security, because you would unfairly burden the system and not pay in your fair share if you're only paying one side of that or the other as a self-employed. So it made it clear you're going to pay both sides, employee and employer. So if net earnings for the year as a self-employed or independent contractor exceed $400, you're subject to the tax, and the net earnings are whatever your net income is plus any distributive share of partnership income or other business organizational form income, whatever it happens to be. If you own more than one business, you can offset losses in income and combine them together to find what is the basis for the taxes that you owe under FICA, under this act. The projected rates for self-employed for taxes, this didn't turn out to be this number because we didn't get a continuation of that Tax Relief Act of 2010. That wasn't continued. Part of that sequester discussion where they just let it happen that the taxes went up. And they did go back up to where they've been forever, and that is 6.2% for Social Security. So this is the employee's share that was 2% lower than normal for 2 years, and so it was lower correspondingly for the self-employed's employees' side of what they owe. So actually for 2013 that number is going to be 6.2%. But you pay both the Social Security and the health insurance or Medicare, and you pay it for both the employee and the employer if you're self-employed. You can have other income from other sources, be employed by someone else, and have self-employment income. And you're allowed to bring both of those in to find out when you reach that cap that we talked about in the discussion in the previous integrity lecture. That cap of, in 2012, for example, was $1,010. You get to include your other income that is subject to Social Security to get to the point where you're at the cap or not at the cap, based on self-employment additions to that W-2 income. You use Schedule C to report profit and loss individually. Schedule C is part of Form 1040. We're not going to get into tax forms much in this course. Just a few of the reporting forms for payroll. The 940, the 941, the W-2, the W-4. We're going to mention those, but we're all pretty familiar with Form 1040. We've heard of it. We've probably filled it out, most of us. So the Schedule C part of it is for self-employment income. You also file this self-employment tax as part of that, a schedule in Form 1040. And you must include self-employment tax when you make quarterly estimated tax payments. So the law in 1943 that required the federal income tax to be withheld from individuals' payroll also said the self-employed will make, and corporations and everyone else subject to income tax, will make quarterly estimated tax payments. So when you are self-employed, because you're payrolling yourself as a self-employed person, if you choose to do that, if you're operating as a sole proprietorship or as a partnership, you're not isolating your business operation from your individual estate. Therefore, you all fall under the Social Security rule and law on tax. So in making your estimated federal income tax, you must also make these self-employment Social Security taxes, which are going to be 6.2 plus 1.45% twice. In other words, about 15.4% of your estimated profits for the year need to be paid in that self-employment contributions tax. That is combined with your estimate of federal income tax when you send in your quarterly payment to estimate those taxes. So that's an important issue. If you fail to do it adequately and on a timely basis, of course, penalties are incurred. So it's an important thing to keep track of and be aware of. Okay, we're going to do some calculations of FICA with W-2 and self-employment earnings, because this is a common situation where you are self-employed, you have a business on the side, or it's not your primary activity, you work also and earn wages that are reported under a W-2, you're employed by someone else. So that kind of thing happens, and we need to be aware of it and deal with the calculation. Okay, let's look at this first example. Celia's W-2 says her wages earned and subject to FICA, and therefore the assumption is that the employer properly calculated that payroll and paid those taxes. That W-2 is $117,000 plus. Her self-employment income was $14,500. How much is her Social Security on the $14,500? The answer is, happily in this case, it's zero. There's no old age and survivor's disability insurance or Social Security on that, because she already capped out of that obligation for the year from this income here that's reported on her W-2. However, her Medicare health insurance required on that $14,500 of self-employment income is 1.45% twice, or 2.9%, $420.50. Therefore, her total FICA, we use FICA to describe this, health insurance, and the old age and survivor disability insurance. We describe FICA that way. So her FICA is only health insurance, but it's still called FICA, and it is due on that $14,500. Okay, now here's another example where we have combined earnings, W-2 earnings, self-employment earnings. You're worried about that issue as a self-employed. What are you obligated for? This employee's W-2 says $78,000 for the year of FICA earnings. Presumably everything was done correctly and all the payments were made under that. His self-employment income is $36,000. We're worried about that. How much of that $36,000 is subject to Social Security? We know all of it is subject to Medicare or health insurance, but how much is subject to Social Security? Well, using the numbers for 2012, the cap for Social Security was this number, and furthermore in 2012, the employees' share were 2% lower than they are now. It was 4.2%. So we subtract the cap from his current earnings. $32,000 more in earnings will get him up to the cap. So not the entire $36,000 is subject to it, just the $32,100. So we do the math there to multiply the Social Security rates, and there are two rates in this problem. There is this rate and this rate that we have to apply to this taxable amount of his $36,000 in self-employment income, and we can come to this calculation and find that he owes a total of $4,382 total FICA due on that $36,000. Now, in addition to that, of course, he's going to owe income tax on this number as well. But that is the FICA calculation, and it's due to the fact that he didn't earn enough in his W-2 to get up to that $110,000 cap. So it lays open these earnings to pretty heavy tax, because you have that tax in a normal year would be 15.3 or 4%, 6.2 twice, 1.45 twice. It's in the 15+% range. It's heavy. It's serious, and although it's a little lighter in this example because we had that 2% reduction, it's still a substantial amount And then on top of that comes federal income tax. Okay, it's important to get set up with the Social Security Administration when you're self-employed, and I'm going to stop for a minute and open up that website. So here's the website we're going to go to. That link is in there if you're interested in going there yourself. So let me pause for a minute and open that up. So here we are at that website. Specifically, this part of the menu on the website is for self-employment tax, and it's for those folks who are in that position. It's laid out nicely. What is self-employment tax? For those first time here, they can read this and understand it. They hear a little bit here of the Tax Relief Act and the 2% reduction and the confirmation that it's back up now in 2013 to the full 6.2% for the employee side of it. The self-employed pay both sides, employee, employer, for that thing. This was prior to 2012. This was the cap for Social Security. It went up in 2012 to 110 plus thousand. Now I think it's 113 for 2013. All of your combined wages, tips, and net earnings are subject to these taxes. The Medicare tax is 2.9%. That's, remember, double the 1.45 rate that is split 1.45 to each party, employer and employee, in a normal relationship of employer-employee. And when you're self-employed, you get to pay both sides. The one point here that the textbook doesn't point out, but this is a logical and fair thing to do, because the employer, a cost of doing business is their FICA taxes. That's an expense. That means it is not subject to the corporate income tax or the employer's income tax. And so this is a reminder, when you're self-employed and you're paying both sides, the employer equivalent portion of your FICA taxes are excluded from revenue, or they're offset as they are considered an expense for you when you calculate your net income. It's an adjustment to make you just like an employer and not unfairly make you pay both sides but not give you the tax break that the employers are getting, because they can call FICA taxes an expense that they have to pay for their employee. Who must pay self-employment tax? We saw this number in the slides we just looked at. If your earnings annually are 400 or more, but you need to always remind yourself that the full detail is probably more complex. And when we go to the actual website, it has another class or group of folks, church employees, and if they have income of over $108.28, and I don't know the history of why this is a rule, but it is a rule, they also are subject to FICA taxes. So I think it just points out the notion, I'm trying to just give you the flavor, that when you deal with regulation and law, you find some things that seem kind of, why is that there? Where did it come from? And it happens all the time. It's in this class and in our task here, our job is just to be aware that you need to look carefully and watch for those things. And whenever you have federal, state, and local law impinging on one activity, the payroll process, you're going to have lots of these conflicts and unusual rules and unusual things that you have to be sure to consider. So that's why I'm pointing out this little refinement on who is required to be involved in self-employment tax. Okay, so then I think we were down to the point, well, how do we get set up with the Social Security Administration to pay our taxes? You need a Social Security number. You need a tax ID number, and that is our Social Security number when we're filing as an individual, self-employment income through Schedule C. And so you obtain that number through the IRS, and they issue the number, and that's the number that you give them when you pay your taxes. And remember, as a self-employed person, you are required to make estimated taxes, and there's rules about that, and there's rules about what the minimums need to be before a penalty is incurred. So if you think you're going to have a terrible year and you don't pay enough and you wind up with a very good year, you you can run into penalty territory where you weren't paying enough estimated and you turn out to have a banner year, then you get hit with a penalty because of it. And there's rules involved in that we're not going to get into, but whenever the government sets up a rule and a procedure and collects a tax, they always set up rules about those who fail to meet the letter of the law. And the rules evolve over time, but that's an important point to remember, is the penalty side of these things. So to get set up with the Social Security Administration as a self-employed person, we get that employer identification number. It can be your Social Security number as a self-employed person. You complete that particular form. We have a picture of that form, and I'm going to stop and go show you that form from the textbook just so we see it and we're aware of it. Okay, so here we see a copy of this SS4, and this is a form that you use for all of your interactions with the IRS and Social Security. It is how they identify you, an employer identification number. This particular applicant is a corporation. They're indicating here they're incorporated, but remember down here the name of the responsible party, that personal Social Security number is given in this application. So the specifics are where you are, what your mailing address is, where do you live, where you're going to operate your business, what kind of a business is it? Is it a sole proprietorship? Many are. Is it a partnership? Many are. This is a corporation, and you're going to file this as a corporate number for tax return for a corporation as opposed to the 1040 for the individual, for example. This particular party, what are they going to do? Payroll processing. So they took this course and they're in the payroll processing business apparently, and they're going to go to work as a self-employed person. They're going to incorporate to do that. So this is all completed, filled out, and submitted. And then when payments are made, the estimated quarterly taxes in particular, no matter which form of business organization you're in, if you're an employer, you apply for this and get this number, and all of your discussion and correspondence and filing with the taxing authority then needs to include that federal number, the employer ID number. Okay, and an important point here, we're still able to use a fax on this particular form as of this time. That's probably going to go away. It's going to probably turn all electronic eventually. Less paper or no paper and all electronic filing. We'll see. And also they offer phone service here to immediately get your employer ID number if that becomes important. If you buy a business and you're a new owner, you don't use the old employer ID number, you use the new one that you apply for. And everybody that is employed or self-employed also needs their Social Security number, which is also sometimes called their tax ID number, for the individual entity. And there's the form number to apply for that. That is this SS5. Required for children age 1 and over who are claimed as dependents. So it used to be that years ago, you didn't provide those Social Security numbers, and people were casual about when their children got their Social Security number. I don't think I got my number till I was in my teens because I went to work somewhere where it was necessary. But nowadays, quickly after, in the first year of their life, parents get that Social Security number because they have to have it to claim them as a dependent on their tax return. So the IRS is tying all that together to identify folks in the tax process. W-7 is a form that aliens complete to deal with this. And we're told down here that employers can verify Social Security numbers by internet or telephone, verify that it is a valid number, and that particular process is part of the current immigration debate that we'll hear about more and more. Okay, here let's talk briefly about the depositing requirements for federal income tax and FICA deposits. They're always combined together when the deposits are made. Social Security and income tax go together in those deposits. You're notified whether you will be a monthly or semi-weekly depositor, and they use a look back. They see what your volumes were in the prior quarters, and they decide whether you should be paying more often or back to monthly. And if you have to pay more often, it's because you accumulate larger amounts in these trust account taxes. So if you pay monthly, it's by the 15th of the following month of the end of the payroll period in that calculation. If you're a large volume and you collect lots of these taxes and you're put on a semi-weekly, in this particular case, if payday is Wednesday, Thursday, or Friday, then you have to make your payments by the following Wednesday. If payday is Saturday, Sunday, Monday, or Tuesday, then you have to make your payments by Friday. Above all this, if you encounter a case where you owe $100,000, you have to get it in one day. I mean, they can set you up on these schedules, but if all of a sudden you have more than $100,000 or more due in these taxes, you have to get it to them in 24 hours, or there's a penalty. So that's an important point. If you're a brand new employer, they just set you up monthly unless you immediately encounter that $100,000 limit and trigger the one-day rule. And then you will automatically probably get converted to a semi-weekly depositor. These deposits are a bit of a headache to make sure that you don't fail to get them in on time and early. So you have to watch that carefully, because they penalize you immediately and automatically and quickly if you don't. Domestics and agriculture have slightly different rules. Like domestics, nannies and maids and whatnot that are employed in a household level that do fall under Social Security, you don't have to withhold income tax for them. You have to do FICA, but not income tax. They can voluntarily ask you to, and you can do that for them. You report those, and you produce a W-2, and you act just like an employer when you have those folks in your employ. And I think at one point that's one of the reasons for the popularity of some of these, like maid services that provide regular, weekly, or maybe even daily maid services to households. They are separate businesses. You're buying a service. You're not the employer. You're simply a purchaser of those services. And one of the attractions in using those services, you don't have the headache and the education that you need to go through to deal with the Social Security problem. There is a safe harbor rule. You can read it on page 319 in the book. It just provides some protection for a minor shortfall in meeting the deposit requirements. It's not a major, it's a minor thing. And the penalties are waived. You be in a safe harbor if you meet certain conditions. But in general, if it's a gross skip, a gross misunderstanding about you owing it and not paying it on time, the safe harbor rule won't give you any protection. There is this other aspect of the deposits required. When they say 941 deposits, that's a form we're going to work on toward the end of the quarter and complete it. It is a form that discloses these tax payments under FICA and federal income tax. In the depths of our current recession that we're still in, this feature was passed to deal with folks who were voluntarily terminated from their job, and was trying to help them out with health insurance. And so it did this. For a period of 15 months, the government would subsidize the cost of the premium of the health insurance that the employer would continue to make available to the employee, but the employee had to pay for it. The government would subsidize up to 65% of that cost. In other words, trying to take most of the burden away from the employee, and they would have the firm, the company that paid that 65% initially to keep the employee's health insurance going. They could take credit for that when they filed their 941 taxes. They would just have a line item that said, have you been reimbursing people that have been laid off involuntarily? They didn't voluntarily lay themselves off. You had to let them go, lay them off. And under this law, for this period of time, between September 2008 and first quarter 2010. This worked for that period of time only. If you are reimbursing those under the law, you get to take credit for it. You get to reduce the required payments of these FICA and federal income taxes. In other words, the federal government's stepping in to try and help those folks out that were laid off to maintain their health insurance. And so the employees wind up paying 35% of the premium. That, as you would guess, in many cases would be a substantial increase from what they were used to, possibly, probably in most cases. And of course, it's done in an environment where you don't have a job anymore. So it's still a huge burden, but 65% does help. Okay, how do you get your federal income tax and FICA deposited? We do it electronically now. That's the system. It's the old paper system has been replaced. There was a transition period. Now you've got to deal with a bank who can make these payments, who's part of the wire transfer system, and can get this stuff done for you and you're in control of when it gets done, but they get it done when you need it done, and you ask them to. So most employers are now on this electronic federal tax payment system. And there is an exception for size. When you're very small, you can do it. You can make that payment in other ways, but you don't have to do it in that electronic system. But in general, everybody that's established is going to be using that electronic system to make their payments. That's the website where you can enroll in that. And new employers are automatically pre-enrolled. This is describing the two methods, and I guess this is kind of like a debit card or a credit card, but that's maybe a bad analogy. But in the direct case, you just tell them to take it and withdraw it from my bank account. In the second case, you say, well, when I tell the bank to send it, they'll send it. They'll do it I'll do that through the financial institution. So it's a matter of you just, in one case, turn over to the taxing authority the right to come and take it. In the other one, you control that time and date that they take it, and you just say, I'll tell the bank when to send it. And I'm sure managing cash and having lots of surplus cash to allow this first case to happen, would be the best worlds, because they'll take it when it's due and you don't incur penalties. In the second case, you may be scrambling to find the cash or putting it together, and hopefully you don't miss your due date. Okay, so in addition to making the payments on time, you also have to report what you've done, and that's a major form in this course. We're going to deal with it and fill it out and use it. Form 941, we're going to do that toward the end because it includes federal income tax. We need to cover that in Chapter 4 first before we deal with it. So that's the form that we use. That's how we report it. It's due on the last day of the month following the close of the quarter, so end of the last quarter of the year is December 31st, so a month later you got to have that 941 submitted. You make a deposit with the form if the taxes are less than $2,500, and if they're more than $2,500, it would have been due according to your deposit schedule electronically. You can make it by, when using this particular iteration V of the form, you can pay by credit card, and I'm sure that's a way many times employers resort to. Okay, so here now we're talking about the Form 941, the reporting of what your taxes were and what was paid. It's done electronically as well, and there's a couple techniques mentioned here where you can use a third party to file it, third-party software and system to file it directly, given that you have a PIN to identify you to establish with the IRS. You can also complete what they call an e-file application and then file electronically. So whether you use a third party or you directly use that e-file, most of us now e-file our personal income taxes, and so that all of the systems of tax reporting are evolving toward being able to file it electronically. And it's a huge efficiency for those of you that have done taxes, and most of you probably have. If you can remember back if you ever had to do paper forms and mail them in, and it's kind of a blessing with the growing complexity to be able to do it electronically. Errors can be corrected. There's always a way to deal with errors in all of this tax reporting because errors happen. And X is the amended return 941 or amended reporting for 941. Okay, so the employer's annual federal return. Let's talk about that just for a minute as we wind up this discussion of Chapter 3. So this slide is just explaining that there are some employers with very small obligations total over the year, and there's a shortcut or a more simplified way to deal with this whole problem. If you owe less than $1,000 per year, you can choose to file this form here. Like when you do your taxes, there's a short form based on a less complex personal income tax return. Well, this is kind of the short form for the federal annual reporting for an employer. And you have to meet all these conditions, and you deal with it carefully, but it is a little bit easier for you to deal with it, and you just need to be aware that's available too. Types of penalties. Let's take a look. Failure to comply penalties are added to the tax plus interest charges. Negligent can result in fines and imprisonment. Willful, large, gross errors, fines and imprisonment. It happens. It's going on constantly. We need to remember how serious this payroll business is. Interest that they apply to tardy payments is set quarterly, and it's based on T-bill rates. Here's a list of issues dealing with the penalties imposed for the following. As you might expect, the Social Security and IRS have penalties for all these things: writing bad checks, not giving the ID numbers. That can be rather inadvertent. But with electronic filing, oftentimes the software keeps you from doing that, which is nice. It's a nice protection. But if you failed to put the ID number in, technically you might incur a penalty. Not sending in the information on time, not completing your obligation to report to your employees in the IRS what you paid them, all that detail of payroll, not making your deposits on time, not paying in full when due, not filing your employment tax returns on time, the 941 or the 944. Those are all subject to penalties if they happen. This is interesting here. The authors of the textbook have done the research that tell us that IRS thinks that 100,000 businesses owe more than 2 years of payroll taxes. This is not income taxes. This is federal income tax withheld likely and FICA taxes, both employee withheld and employer pay, supposed to be paid. And they estimate that total is in the range of $58 billion. So it's a massive amount of tardiness and penalties and amounts due to the IRS. So that concludes our discussion of Chapter 3. Remember, we're going to revisit that Form 941 later on in the quarter, but we're going to move on now to Chapter 4, and we'll proceed through that income tax view of payroll that we need to get familiar with.